Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. Today we have a return visit from a legendary market analyst and economist. We're talking about Charles Nenner of Nenner Research and CharlesNenner.com. Charles Nenner, thank you for joining us today on USA Watchdog.
All right, nice to be here again.
Well, good to have you, and I just want to start with a big picture. The managing director, Christine Lagarde, the head person at the IMF, has cut growth forecasts down to 3.3% between now and the end of the year. And she says that the global economy is weak and uneven. Her words, weak and uneven. What do you say in the big picture about the global economy?
Well, as a surprise, he's right this time. What we have is we should still have a nice quarter till the end of the year. And next year, we should start weaken again. As most people know or don't know, we got Schumpeter, who wrote down about kitchen cycles and Euler cycles, which are inventory cycles. And they're all topping. We have had a normal business up move. The problem is that the GDP never got much above 3%. So now we're going down from 3%. And it's kind of scary, especially because, as you know, I still see a lot of deflation on the horizon, and that is going to be something very difficult to fix.
Deflation, and that's debt destruction, bond destruction. Is that right?
Destruction of almost everything. And, it's interesting. In history, from the 1800s to 1970, most of the time we had that situation. Now only the problem is that we owe so much money, and you can only get out of that thing by inflating, and deflation will only make it worse. So I have no clue how they're going to get out of trouble.
And what do you say it's scary? So what do you say is going to happen? What's the scary part about this deflation? That just people lose tons of assets and retirement funds go broke and banks go broke? I mean, what do you see that's scary?
Well, you go in a downward spiral. Let's say you want to buy a new car, and in 2 months the car is cheaper, so you wait buying it. Make this very simple. Now, if you don't buy the cars, then the factory that has to make the cars is going to lay some people off because they don't have any buyers. So those people don't have money to buy cars, etc., etc. So you get in a downward spiral, which is very hard to get out of.
And what do you think happens to the stock market and the banks if we have this kind of situation?
Well,
let's start with the stock market.
Well, I don't have an opinion what is better at the moment, the deflation or inflation, because it has to do with how long the deflation is going to be. But I have been saying since a couple of months that I don't see the stock market more than 5% higher until 2020, especially with a big down move from 2018 into 2020. It's going to be a huge crash. And we went totally out of the market, and I think we've seen a top.
And what are you going to do between now and then? What do you suppose the stock market will do? Will it start falling out of bed next year? So it looks pretty good. You think it'll be pretty good this year, and it'll start crashing or start going down next year?
Yeah, we're making a top. To look at where we're in 2000, you look at some indicators like the price to sales and the price to book. It's lower than where we were in 2000. Underlying, there are a lot of technicals that don't agree with the bull market. Plus that my cycles are topping. Plus that my upside target has been reached. If you want to gamble, you can always say, well, I can make a couple of percentages, but the downside is much more risky than the upside.
Downside much more risky than the upside. Let's talk about some of your sell signals. You're selling oil and you're selling the markets here is what it looks like your research is saying, that you're selling oil. Let's start with oil. You think oil gets cheaper. Why?
Well, oil we already sold 2 months ago, because the cycles were down, and soon the cycles are bottoming, so it's a bit late in the game. Why is oil down? First of all, I think we are and will continue in a bear market for commodities, and oil is part of that, but I expect geopolitical problems, and then when the cycles bottom, probably we're going to have a catastrophe somewhere in the Middle East or who knows where, and that will bring the oil price up again.
So you're fearful of this whole ISIS threat, this wider war coming back to eastern Syria and western Iraq. You are factoring that into your analysis.
I tell you, I'm very fearful of the Chinese situation, what's going on there. If you look at the Aero stocks index in China, Vietnam, and Japan seems to be rearming. We have that problem in the seas around China with the islands. I think that's going to even be a bigger problem.
So you think the South China Sea and the disruptions with China fighting over this big swath of territory over there, you think that's going to cause big problems in the markets financially?
Yes.
And do you think that the markets will go down from here? You've got a big downside. You're bearish on the Nasdaq, one of your most recent reports. Tell me about that. Why are you so bearish there? Everybody else is woohoo, all these IPOs and all this great, these innovation and technology, but yet you're saying you're not really liking the Nasdaq. Why?
What you said exactly was what you said when everybody says, "Ooh, all the IPOs." That's usually the end. If you look in history, when that is the atmosphere, then usually everybody bought already, and there's nobody to buy anymore.
Now, let's talk about gold a little bit. Last time you said it could go down, and you said you had a downside target of around 1150. It looks like you could test that. What's your prognosis for gold, and let's throw in silver there too. Let's start with gold.
Yeah, let's repeat that. We then said that July was a quarterly cycle, so we have all kinds of cycles: quarterly cycles, monthly cycles, weekly cycles. The quarterly cycle was bottoming. So when you talk about it's one bar on a chart that is good for July, August, September. So that could happen in July, August, and September. So that was the quarterly low. And then we were looking from daily low to daily low. And then, as I said in the last time in the program, we could still see 1150. I think we saw 1175 or so a week ago. And the next short-term low is next week. And I think we're going to take it. I think we're going to do some buying, especially if gold will close above 1225. Because, like I said, every short-term low now, because the long-term low should be seen as a bottom.
Oh wow! You were not a buyer last time. You were not. You said maybe we're looking at it, but now you're saying that you're liking gold somewhere here in between now and the next week or so. Is that right? And why? Why do you like it?
Well, that's just because the cycle's bottom, and we've been very close to my downside target of 1150. I thought maybe we don't reach it, but we came pretty close. So since the short-term cycle is bottoming, going up into December, I have to give it a try.
Okay, and let me ask you about, if you see deflation, certainly the economists at the Federal Reserve see inflation, and, that's been the big bad word for all of for the last couple of Fed chiefs, that they were going to fight deflation, that they were going to fight deflation, prices going down. And do you think they might have some kind of things get bad enough in the deflationary spiral like you were talking about? Do you think they might just start printing money again and bring back more QE programs?
Well, let's go to the facts. Even China has almost no inflation left. I think like 2.5%. And 80% of the world is in deflation. Mostly also because there's a commodity bear market. Now, Europe is a big problem, has an inflation of 0.3%. So that gets very close to the 0%. The problem is the strong dollar in the United States that will lead to deflation in the United States. And at a certain moment, things just have to go the way they go, and you can print whatever you want, but you cannot change the way that the economy is going. The economy, according to me, is like a big ship that is very hard to turn around. It's not that you turn it around in 1 week. It's based on what I call the super cycle of 250 years. It has to do with going off the gold standard, has to do with a lot of things. And the Fed can just not fix certain things. They just have to go the way and take their time. So I don't think whatever the Fed's going to do is going to change this deflation. Just has to take its time. And by 2020, we should be in better shape.
And why would you like gold going into deflation? Because you can't destroy gold, you can't destroy the asset, you can destroy, bonds and notes and things like that?
Yeah, well, let's say the market goes down. Let's say the market goes down, but the economy is weak. So see what happened in Greece and these countries. The economy was weak, but interest rates were shooting up. So the fact that the economy is weak doesn't mean that bonds will continue to go up. So that's dangerous. The real estate is going to be very difficult. So you have to put your money in somewhere. So since it's very cheap to take a loan, and at least you have something, you have the gold, you put it on your mattress or whatever, people are going to buy gold.
And you think that we're just about at the bottom of the cycle, that you think, is this a cycle that's going to be the bottom for the next several years? Or do you think it's some people are saying gold might go down to, $600-700 an ounce, which is going to be really deep into mining costs there.
Yeah, but then it would be really a lot of, below the production costs.
Yes.
And that seems unlikely.
So you don't think it's $600 or $700 an ounce is unlikely to you? You think 1150 is your target?
As you know, we have a newsletter, and I preserve the right to have some changes if I see something else in a couple of months. But this is what it looks for now, that we have a cycle low next week, going up into the middle of December, a breakout above 1225, and we have been close to our downside target. We didn't reach it, 1150, 1175 was the low, but I'm taking a chance because of the short-term cycle low. If we close above 1125, to do some buying. 1225, excuse me.
And you know, you're less about a prediction and more about what you're worried about is what because you know you're doing all this market analysis and you've been doing this a long time. And as I said, you are a legendary market analyst. What keeps you up at night? What are you worried? Are you worried about this giant pool of derivatives and deflation? Are you worried about governments going under? Are you worried about war? What is your big worry?
I don't remember ever discussed my war cycles with you. So I did cycles on war going back 3,000 years to the Mandarin Empire. So it's the same thing as doing cycles on stocks. For your listeners, it's maybe interesting just to see how something works. If you look at a war cycle of 100 years, because I predicted like now in the second decade of this century, we're going to have a big war. Now, if you go back 100 years ago, you had the First World War, which led up to the Second World War, which was a big war. Then, 100 years before that, you had here a big war in 1812, and you had Napoleon in Europe in 1814. Now, if you Google, and he says, for instance, big wars around 800, around 700, around 600, you find some very interesting thing. You find the 100-year cycle, where in every second decade of a new century, there's a big war. So, what keeps me up at night is the underestimation of that we're going to have a big war. Why? Because the war cycles are up, and they didn't even show the wars in Iraq and Afghanistan. They were too small to show up, so this has to be a war which is much bigger. So go to Google and go to start with the 600, 700, 800, and just say major war around 600, 700. It's an amazing cycle. It's only one of the cycles exists, just to show you how regular these things are.
And in this 100-year cycle, I guess the reason why you're really worried is because unlike any other 100-year cycle, let's see, 600 years ago, no nukes. 500 years ago, no nukes. 400 years ago, no nukes. 100 years ago, no nukes. Today, nukes. Is that why you're worried?
What you have is if you have the stock market cycle, you'll have price and time. And here you have time and the amount of casualties. And in every big war, the casualties go up exponential. So you can imagine what can happen.
And this is because of, you think, in this cycle, unlike any other 100-year cycle, this time there's the introduction of nuclear weapons, huge nuclear, and biological weapons for that matter.
Anything is possible.
Charles Nenner, thank you for coming on USAWatchdog.com with your multi-pronged analysis on all these markets. That brain of yours is something else, my friend. Thank you for coming on USAWatchdog.com and giving us your analysis.
Thank you for being here.